How are you all doing? How is everybody this morning? Lovely Friday, finally. Weekend is here. Morning, Stevie, Martin, Steve, JC, Virginia, Danny, Monkey, Michael, XR Update.news, IGGGG. Not sure what that means. Morning, Amy. 2 a.m. Oh dear. Morning, Alistair. Right. Let's have a quick recap of the news before we get going. So, obviously yesterday we had all of the Bank of England stuff. So it was the 5% increase instead of the 4.75. Day before we had the CPI figures, which were bigger than expected. So all fully bullish on the pound. And obviously in typical fashion, the pound today, against Australia anyway, has decided to go through the roof. So we're getting some massive bullish movement off of the pound this morning. But yesterday we just got whipsaw and complete indecision. So waiting to see what happens with this pound. I think we need to give it a couple of days to bed in the news and just see what they make of it, because it should be bullish. We're expecting bullish movement off of interest rate rises, especially when they're unexpected like this. So it looks like that's starting this morning, but obviously this is one candle. Doesn't mean anything, does it? Australian dollar overnight, big drop on the Aussie. So this is still coming down. Really wish I'd have held on to the Aussie New Zealand, but I didn't. Anyway, so that's come down very, very hard. Today is PMI day. So we've got Lagarde speaking this morning, 7:45, which is now. Nothing come out at the moment. We've got then after the open at 8:15, we've got the PMIs for France, followed by the German at 8:30, followed by the Euro consolidated at 9, followed by the pound at 9:30. And then we've got 2:45, 15 minutes after the US open, we've got the US PMIs. So all the opens today potentially affected by the PMI figure. So just be careful if you're trading the opening range breakout on any of this today, because the market might want to wait, especially for the German. The German is the largest PMIs. So that's not until 8:30. So we might find we get a little bit of that at the open and we don't actually go anywhere. But we'll see what happens. You never can tell. But typically with news, you tend to get a little bit more of a contracted open. Same with the US, 2:45. So for 15 minutes, they're not going to want to dump loads into the market. They're going to wait and see what happens with the PMI figures. So we will see what happens with these. So that's today's news. Overnight news, there wasn't really anything at all. We had the CPI for Japan come out as expected, pretty much. That was it. Nothing else exciting. All flat there. We've had retail sales for the UK this morning. So this is what's kickstarted this move this morning, is this retail sales figure. Retail sales came out positive. We got a 0.3 on a forecast, negative 0.2. So that's nice and bullish. We're spending money. Last time we're going to be able to, because they put the interest rates up, so we're all going to basically go bankrupt. So that's why we're getting that move off the pound. Get the Aussie, because the Aussie's obviously been dropping, but every other pound you can see, obviously it's only happened in the last hour, which is the news. So we'll wait and see what they make of that. Just because retail sales have gone up doesn't mean necessarily we're going to get a rally. So it is obviously going in the right direction. So that's 3 days this week, 3 news events from the pound, every single one of them green and bullish. Yeah, so bullish retail, bullish interest rates, bullish CPI. Absolutely no reason why this thing shouldn't already be way out the highs on everything, and it's not. So there's the market's just not interested at the minute for some reason. So we'll. Sorry, just moving my arms on my chairs the wrong way. Don't know why, but we'll wait and see what happens. So if you're in any shorts on the pound, just be careful. If we do test these highs across all instruments, it's going to be probably a breakout attempt. Whether it works or not, we don't know. So just be a little careful. Morning, it's time. Morning, John. Morning, BBMA, Malaysia. So DAX this morning, we've got 3 minutes to the open. We didn't quite get the gap fill yesterday. Beautiful trade yesterday on the DAX. Off of that low that we looked at. This bounce just went straight up. Didn't quite get the gap fill though. So what we did yesterday was we tapped straight into that previous low. So that's the low there. We basically hit that and sat there. Yeah, so basically that was the low of the previous day. Market came back up and tapped into that. That was the gap fill. So near as damn it, that gap fill is done. Yeah, when you're looking at gaps, different people have different opinions on it. I don't really have an opinion on it because I see both happening regularly, but that is where the market closed. Some people class the gap fill as when you've closed that. Some people look at where the low of the day was on the gap day and use that. In this case, obviously, that's what the reaction was. But you can see they're very close together. So, for argument's sake, that gap fill's done, isn't it? Which leaves, obviously, that gap fill being complete as well, which does still leave us those previous gaps from the high. So we are looking at this area as being completed and this area. Now, again, looking at the rules on gaps, yeah, there's the low. And it did touch it. It didn't do the gap, though. So, it's discretionary, isn't it? But that one there, that we've definitely got a gap sitting there. And we've got a huge gap again today. So this thing's gapping down hard. They are selling out stocks a lot. So you've got to have a bullish stance on it again today. So if we come back down and retest the low at the open, that's a fantastic buy for a gap fill. Exactly the same play as yesterday. Look. We got the gap. We came down, rallied up. Yeah. Got the gap. Come down, retest that low. You're going to find limit orders triggering there. There's always limits at the low. There's always limits at the high. That's the play for the day. But it might just rally straight out and do it. So see what happens. If you're trading the opening range breakout, obviously be aware that we've got tons and tons of news coming. So it could go either way, couldn't it? Right, so that's the DAX. Covered the news. I'm just running some tests. Very nice. 1900 tests, so that's going to take 38 hours. Running. So your pre-market 5 is there, your pre-market 15 is there, and obviously we're just at the pre-market highs, so could have a lovely big run today, can we? Morning, Baggy. So we'll see what happens. We've got 11 seconds. So let's see how we get on. Morning, Burke. Excuse me. Okay, 5-minute ORB. Pre-market 5 is triggered, short. So run down basically to yesterday's low. I'm just basically this EA, this version of the EA is it's using a very wide stop loss, as you can see, quarter of an ADR, so I can test all the functionality on it basically. TP is going to be 2R, which is obviously quite big because so it's half an ADR basically is the TP. But obviously, if you're taking the pre-market 5, typically you would be getting out. You'd be out by now. You've had a very nice reward this morning. Whoops. So pre-market's done 2R. Pre-market 5, you've had a 2R straight out the gates. If you're trading the pre-market 15, not quite 1.5R, but close. So we'll see where we go from there. So first news we've got is 8:15. As I say, that is the PMIs for France. We'll have a look at the that. You? Oh, it's that Bing thing. Okay. My Windows asked me to install a. Did I want to use its AI search engine Bing thing as a plugin for Chrome, and that obviously is part of that. That's pretty handy, isn't it? Quick web search. Trouble is, I want to use Google. I don't want to use Bing. Anyway, I haven't even seen what it does yet. Right. So we'll watch that and see where we go there. Downside, obviously, target I would look at no more than the low from yesterday. If it's going to get there, it looks like it's kind of rejecting that low. I wouldn't expect a rally down to there before the news. I would expect the news maybe to cause the rally, but I don't think we're going to get down to there. So more likely it's just going to rally back up again, but we'll see. Right, ADRs today. There's a few ADRs today already, mainly off the Australian dollar. So Aussie dollar, we had a big drop overnight. There's no news that's caused this. It's just literally selling the Aussie dollar. So there's nothing in the news, no catalyst for it. It's just market movement. They decided to scale out the Aussie dollar overnight. So big moves there. We've got ADR there on Aussie dollar Swiss. As you can see, it's come straight down into ADR. Hit ADR to the pip pretty much. Your reversal alert on that one triggered really nice and tight as well. So as an ADR reversal goes, doesn't get much better than that. Very, very quick, easy scalp trade. So from there, around about half an ADR is 26. So half an ADR just takes you back up midway into that move. Easy to get to. A third of an ADR, if you're being conservative, takes you down to there. So only got to get there or there for a quick scalp play on that today. Swiss franc is going to move off the back of the European rates as well. So you're going to get some Swiss franc movement. So if we get negative PMIs across France and Germany, we'll get the negative PMI consolidated at 9:30. 9. Sorry. Well, that's going to annoy me. Let's turn that off. Swiss franc, if we get negatives, obviously we're going to get movement to the upside because the Swiss franc will weaken on the euro news if it's negative, and then obviously the Aussie will take advantage. So that could be a really quick in and out today. Aussie dollar yen came straight down into ADR. All of these, look at them. They're just absolutely perfect today. Straight down, touched ADR, tightest reverse alert you can get. Bang, in and out, done. Half an ADR on this is 55, which is there. So you're looking at somewhere up into there, or potentially third of an ADR be somewhere around there. That's a target. Aussie dollar, US dollar. Same thing. Hit ADR, so this is 100 ADR, nice reversal alert. US dollar's powering up today, this morning, so we'll see if that continues. But the Aussie dollar obviously is having a good old rally against it at the moment. So that's a good ADR reversal there. Really big, strong move. These are the ones you want. Nice, big, stretched move in Asia, elastic band theory, snap back quickly in London, and then obviously let New York decide where they want to go from there. Euro odd. That's obviously a hit to the upside. Opposite, because Australian dollar's been weak. Nice M pattern reversal. There's your retest. Back down. And you've got the pound odd, which is the same as the euro odd, basically. You've literally just had the reversal alert on that. So got low, high, low, high, low, high. That's your very first reversal alert on that off of ADR. So there's your entry right now if you want to get into that one. So that's a nice short. Nice big propulsion gap targets left in place as well. Obviously, yesterday's high and the previous day's high are your obvious targets, which is 81 pips, which is just over half an ADR. Half an ADR is 74. There's your ADRs. There's a lot of weeklies hit, we know, mainly these Aussies. And the yens. It's all Aussie and yen basically at the moment, isn't it? As you can see. So it's a bit late on the Friday to be taking them, but the yens obviously are all very, very stretched still. Starting to roll over a little bit. So New Zealand obviously has come down with the Aussie. The Aussie dollar yen has started to come down fairly hard. The CAD yen and the Swiss yen, CAD yen's rolled over a little bit. Swiss yen started to roll over a little bit. Euro yen starting. So the yen is looking like it started a little bit of a power up this morning during Asia. Again, we'll see if it carries on. Interestingly, there was no news overnight from Japan at all. Yeah, so nothing. We had obviously the CPI figures, but there's no talking heads. They're not, we're watching the Forex markets closely. We've had 2 days of silence, radio silence on that, because we haven't had any massive rallies, have we? So there's potential, I think, for the yen just to naturally power up a little bit. The US is certainly starting to power up, and the yen will potentially go with it. So might be a good one today for the yen and the US. So there's your 5-minute opening range break. Well, there's your 5-minute opening range. Yeah, no break yet. So there's your ORB on the M5 if you're trading the ORB EA at the moment. No entries on the 5. Pre-market 5 and 15, obviously straight down shorts. Good moves today. Sec. Looks like we might be rallying for that low. So not far to go. Be interesting to see if we hit that in the next 5 or 10 minutes. If we get down to there before the first news release, we could have a very nice ADR. So basically, the gap fill is now ADR. Obviously, ADR will be down there if we get down to here. So it'll be an ADR hit to the upside to get the gap fill done today. See where that goes. Right, so there's your ADRs. Just trying to get through these before the news comes out. RSIs, there's loads of RSIs to look at as well today. Again, it's all the same stuff. It's the Australian dollar, it's the Canadian dollar. Canadian dollar, the yen. So Aussie dollar CAD. So that is now extended on the hourly again. So we are back down below the 25 level again, but we've been extended and embedded on this, as you know. It's just relentless at the minute. This Australian dollar, it's either crazy one way or crazy other. So Aussie dollar CAD, beautiful A-shaped recovery going on at the moment. So back down to the monthly low, which is 150 ADR today. We should get some kind of reaction down there. This thing hasn't stopped, look, all the way down. So the Aussie dollar has been either rallying like a crazy beast or collapsing like a crazy beast. We've had some decent Canadian dollar strength off of oil. Let's quickly look at oil, because oil I got out of yesterday. So got in on this hammer here, basically, which was a double bottom off the monthly. So there was a reversal in there on M15 that I took, got in somewhere around there. Broke even the trade. Yesterday, brought the stop up to there because we were too close to target to let that run, and I'm so glad I did. So locked in 4R on it yesterday. So that was 4R. That was target. So when I said yesterday in the live room, we've just taken these highs out and we're pulling back. If this is going to collapse, I don't want to be back down here and breaking even on it. So I put my stop up to there, and I was either going to hit that or get stopped out. Got stopped out, which is fine. But it's absolutely collapsed yesterday. So oil inventories came out yesterday. Can't remember what the oil inventories were. Didn't even look, to be honest, because it doesn't really pay any attention to actually what the oil inventories are. But they came out at negative 3.8. That's really annoying. Can you not turn that off? Turn off quick searches. Thank you. You've turned it off. Thank you. So minus 3.8. So basically, we're expecting a positive barrel count. We got a negative barrel count. which is bullish oil. Yeah, so obviously what oil did was absolutely collapse. This is what I mean. With oil, you can't pay any attention to the news because the only news we get is oil inventories and the market doesn't give a crap about them. So, which is probably why you'll see them in yellow. But that is when they tend to make the move. So they move on the news. It doesn't matter what the news is. They use it as the catalyst. So I've got 3 minutes to the news. So oil has come down very, very hard. Obviously, Canadian dollar is related to oil. It's its major export. So when the Canadian dollar, when oil comes down, the Canadian dollar tends to get dragged along with it. So when you're looking at things like the Aussie dollar CAD, you would expect to get a rally off of this because the Canadian dollar will typically weaken off the back of that. So where we're coming down to now, this propulsion gap and this previous monthly low where we initially caught that bounce, it's basically now a case of you can buy it again from here and just try and play the same. So this is not oil, but you know what I mean with oil. You can play the same thing. So with the Aussie dollar CAD, it's pretty much the same move as you've just seen on oil, taking that bounce again and back up into a range. There's no real advantage for the Australian dollar. It should be fairly bearish moving forward. The Canadian dollar should be bullish moving forward if we get the bounce on oil. If we don't get the bounce on oil, that's collapsing. So if we don't get this bounce, come on, pen, which is what we took, we're coming back down to this low. So Helpy FX have just come back in. Our friends with the 83% strike rate on their signals. Hello, market, and thank you for your last week's share. You talked about Healthy FX free signals. When I Googled it, I found them and I joined their free group. Oh my God, so much money I made following them. Crazy profits. Thank you again, mate. No problem, Borgie. Bye. You got to give them their due. They're consistent, are they? They're consistent scammers. Scammers that don't give up, which is pretty much all scammers, isn't it? There's so many variations of me flying around in Telegram at the moment. I'm getting weird, like, what am I getting? You know, what is it when you've got a split personality? I've forgotten what it's called. That's probably because my split personality doesn't want me to tell you. Anyway, yeah, there's a lot of fake me's running around in Telegram. So if I contact you in Telegram saying I'm going to give you everything for half price and I've got this amazing investment opportunity with Bitcoin, it's not me. Right, news just coming out. Let's get the DAX up with Euro US dollar. We'll see what impact we get. So your 5-minute ORB on the DAX, you are still inside bar on that. 20 seconds to go. Well, I think we've got 20 seconds to go. It looks like the platform's frozen. Oh, there we go. Okay, news is out. Euro negative. So we should get a rally up on the DAX. 47.3 on a forecast of 51. That's bad. Okay. That's just the French. See what the German does. The German could completely undo that. Why is the DAX not moving? DAX is actually frozen. That's the DAX frozen. Look, everything else is moving. The DAX is actually frozen. Weird. Okay. They suspended trading on the DAX or something? Right, there we go. Oh, I don't know what that was. All my platforms froze at the same time then. It's almost as if the DAX just stopped trading for some reason. Okay, so yeah, so Euro down, index up. Schizophrenia, that's it, Diamond. Anyway, that's how I feel, schizophrenic. But it's not me, yeah, Telegram. There's a message goes out now. I've adjusted the message that goes out every day in Telegram with all the information on. There's a big bit at the bottom now that says, I don't contact you to sell you stuff. You want to buy it? Fine, buy it. I'm not going to sell it to you. You should be with 8 cap. Not frozen there. Aha. Probably not. Because they're making it up as they go along, basically. Yours froze too, Alistair. Yeah, something weird just happened with the DAX there. That was odd. I think that was the exchange feed froze there, obviously, because what you're seeing here is a CFD, a contract for difference. So the contract for difference is fed from the futures price and then adjusted as the contract for your broker. So I should expect there that the actual futures contract froze, which is obviously meant they couldn't calculate their CFD prices. So weird. Not seen that before, but anyway. Right, so Euro US dollar down. I've just hit TP on the Euro US dollar. So that was the entry from Wednesday, TP'd. So it's 1 ADR profit. We're still going. So you got an ADR there, but don't get in the way of this euro. This is just one bad news. There you go, Euro US dollar ADR. It's just one bad news. Obviously, we've got German and consolidated to come. So this could go a lot further. That's a big miss as well. So 48 off of a 52. If you look at the normal variances we see, so a normal variance, we got a 54, we got a 53, 1%. A 53.5, we got a 56, 3%. 52 to 55, 3. 49 to 52, 3. Pretty much as expected, 1%. This is 4%. Yeah, so this is a much larger than normal variation on this. So it's not just a miss, it's a big miss. So if we get a similar reaction off of the German figures, and look at the German figures, they've been negative for the last 5 months. We're going to get a much bigger drop on the euro today. So, which if you're in the euro yen, you'll be going, as I am, pretty much. And obviously the DAX gap fill long is in play now. So looking at an ADR hit potentially on that today too. Right, that's first batch of news. 10 minutes to go until the next. So Aussie dollar CAD I've covered. Aussie dollar Swiss. Let me just check the chat. A week for euro pound to sort. Now this, yeah. So euro pound obviously will be coming down super hard. Well, I'd say super hard. It's not the biggest mover in the world, but yeah. So just watch all the euros. Okay, Aussie dollar Swiss. So we looked at this one this morning. This is an ADR hit. The ADR bounce is obviously playing out now. So as I said, when I was talking about the ADR bounce, if we get negative news on the euro, the Swiss franc will dump, which means the Aussie dollar Swiss will pump, which means you've just hit target. So target on ADR reversals is thirds to a half an ADR. It's a scalp play. So 26 pips is half an ADR. You just got 20. So there's a third of an ADR done. So if you're in and out on a third of an ADR as a target, which I think a lot of people are. So Aussie dollar Swiss extended on the 4 hour. Obviously that's just starting to play out now. So MA15 reversal alert you've just had on that news event, although it's going. So if you want to get in, you need to get in now. Aussie New Zealand. So that's come down very hard. Obviously we know that. I'm out of the Aussie New Zealand. Wish I'd have held it longer, but I didn't. So big yellow box. We are back now down in the 2472 zone. So if the New Zealand dollar is going to weaken further and the Aussie dollar is going to power up further, which I don't think, this could be where we're looking to buy for the next leg up. So this is your 38 retracement. We looked at this and where we're likely to pull back to. This was, oh no, it's not quite there actually. So it's this propulsion gap, isn't it? So it's this propulsion gap here basically, which is the 38 retracement, which is ADR today. So ADR today is a shallow pullback. So if we're going to get a new leg up on this, it's a shallow pullback rally from there. If it's going to be deeper, 50 to 61.8, obviously. And the other option is the A-shaped recovery to come and fill the propulsion gap. One of them is going to happen. I don't know which. So there's no bias fundamentally for a long or a short on it. So you can kind of take your pick. But the thing's rallying hard and then collapsing hard. So who knows? It's one of those pairs at the moment which is just impossible to forecast anything on. So it's just, if you fancy it long, get in long, manage the trade as usual. For me, I'd probably want to see this more extended than it is at the moment. I think with the 4-hour RSI extensions, if you are trading 4-hour, I think you need to be waiting for 80-20s at the moment, because these movements that we're seeing are very volatile and very strong. And they don't seem to wait. So the difference between getting in at 70 and 80 is quite often a couple of days, and a couple of days is quite often a couple of ADR. So it's the difference between being in sort of 3 to 4 positions to 6 positions or so. You know, so it's worth waiting, and we are getting them as well. Yeah, the 4-hour RSI is lighting up on a fairly regular basis. They're better entries. It's worth waiting, in my opinion, at the minute. But the trouble is, it's all hindsight. Whenever I say things like this. Now, at the moment, it looks good for this, but it didn't initially. You know, things change. So you've got to kind of decide for yourself how you want to get in. As I say many times, how you get in is irrelevant. It's what you do after you're in that is what makes you profit or doesn't make you profit, because you can't determine whether or not you should be taking that RSI, or that RSI. The market will decide when it turns. You just have to pick one to get in with. But at the moment, we're seeing big extensions over the 80s and under the 20s. So probably worth waiting a little and take the A1 setups, basically. Obviously not guaranteed to work, but more likely than others. So go in 1 sec. Right. 6 minutes. Aussie New Zealand. We've also got Aussie US, which has just got extended on the hourly. So we've got a big move going on at the moment. We did have a big move going on in the US, but Aussie US, big slam down into ADR today. Big drop on that one. Again, Aussie US got out of far too soon. But, you know, this is the trouble. This is part of the problem with over leveraging. And this account that I'm running in here at the moment is over leveraged, obviously, because it's just the EA is just taking every trade it sees, which is obviously not what you do normally, but for demonstration purposes, so we can see what goes on with every trade. The problem with doing that psychologically is because you're over leveraged, you want to get out as fast as possible, because you know that if things go wrong, you're going to get wrong even more, which makes you exit early, which is exactly what I've done in this case, obviously here. Exited with a nice profit, but way too early. Look at all this propulsion down here. I mean, it's coming down further, isn't it? We're expecting some US dollar strength to come through, which has been lacking, and now it's started to kind of get out your trades early. But there's plenty more downside, I think, on this one based on US dollar strength. So we are just extended on the hourly. Again, wait for a decent extension. There's an entry there, which obviously I exited as well, because I said in here, didn't I? That was an entry with H1M5 mean reversion entry strategy. As it started to move, I broke it even because I didn't think that was big enough of a pullback. We had more on it, and it has, which is great. But same here, really. I think there's a good chance of an A-shaped recovery on all these Australian pairs. Because there's no reason that the Australian dollar should have been that strong off of the interest rates. It's lagging behind on inflation. it's lagging behind on interest rates. Yes, they put the interest rate up, but not enough. There's no reason the Aussie should be this strong. The US dollar should be a lot stronger than it. So I would expect that to come down much further and potentially do an A-shaped recovery on it. So if you are going to get into anything long on the Australian dollar, especially against something that's got the power to power up like the US, just, plan your trades. Always looking for decent support resistance levels where the market's going to bounce. So you've got one there. Yeah, so that area there was resistive, supportive. That's a good level, 175. So if you got in there and didn't like it, 175 ADR is a good second entry. By that time, you'll be massively extended with no profit take on that move, and you'll be back down below there. Good entry. Just plan for the fact that that was the last resistance, and then you've got that monthly support. So entry 1, entry 2, entry 3, entry 4. Maybe don't space yourself out 3/4 of an ADR. Maybe use support resistance levels instead, because if it is going to continue to come down, and we've seen how strong it can be going one way, no reason why it can't do it in the other direction. Just plan your entries a little bit more careful at the moment, because things are very volatile. The market hasn't got a clue which way anything is going. We've got 3 minutes to the news. Okay, so DAX is out the highs at the moment. So that's Aussie US, CAD yen and Swiss yen. We know all about the CAD yen and the Swiss yen. The yen is utterly destroyed at the moment. No power whatsoever. It is starting to power up. We're seeing signs of life coming through, mainly when the Bank of Japan go, oi, we're going to intervene if you don't stop it. So they stop it, and then they go, well, maybe we'll push them once more. Eventually you will push them and they'll go, screw you lot. And we will be down there in one candle. So shorts on the yen, don't really care. It's coming down. We're just waiting for either the market to come to its senses or for Japan to force the market to come to its senses. The banks will lose a load of money if they do not stop pushing it. Their choice. They've done it 3 times in the last 12 months. They will do it again. And every time they do it, they come out and they announce it to us, and the market either listens or it doesn't listen. Nothing you can do about it. It either does or it doesn't. So we'll wait and see. 1 minute to the news on Germany. So CAD yen is extended on the 4-hour. So hourly RSI, we came out of an extension yesterday. You would have been in before that, obviously. We've had multiple. That was the last trade that worked well. That was the just about entry. Some people probably wouldn't have got on that one. You would have got on that one, though. So that would have been your first entry. We're what, 1, 2, 3, 4, 5, day 6 rally. Has had a bit of a profit take. That's when we looked at it and thought, yep, this could be the reversal starting, but didn't, just rallied again. So right now we've got some yen strength coming through, which is lovely to see. We'll see if we can get that continuation. So I'm looking for an ADR day, basically. And if we can get an ADR day, hopefully we'll get a follow through. That's what we got there. We didn't get the follow through that time. So it will come down. It's just a case of waiting. This could be the start, as I've just drawn there, of head and shoulders reversal. But I'll be out on the shoulder anyway, so I don't care. So that's CAD yen. Okay, there's the news. Yeah, further downside momentum. So Germany was bad as well. Euro US dollar 125. DAX. Opposite reaction. Actually, it's not really a reaction, is it? Euro yen 125 ADR. I've got trades running short. Weird reaction, but anyway. So potential second leg. So low, high, higher, low out of that propulsion. If we're going to do the gap fill. Not quite sure whether DAX is coming down with the euro, but it is. I gapped as well on that. So let's have a look at the figures. 41 off of a 43 and 54 off of a 56. So services with a big miss. Manufacturing pretty much as expected. Manufacturing was a miss and services a miss for Germany, which means that the overall figures coming out at 9 o'clock are going to be negatives as well. So the market makes its reaction mainly on this. That was a big reaction on that one, but because obviously the figure was big. But Germany is the biggest economy, so therefore that's where you tend to get the biggest reaction. By the time we get to the 9 o'clock news, the market obviously knows what the result is because these are the two that make up the vast majority of that. Therefore, that is going to come out as a negative. So not good for the euro. The fact that we've hit 125 at the London Open, how far can that go? So looking at the euro pairs, obviously the drop could be absolutely catastrophic from here. Swiss yen, ADR, obviously the Swiss franc will be devaluing along with the euro. Therefore, that's coming down, obviously. Oh, now that's an entry. H1M5 entry. Look at that. Very much. So yeah, just watch all your Swissies short and your euro shorts if you've got them on. We will pull back into this propulsion. So this is a propulsion gap forming now. So depending on where this hourly candle closes, obviously, if it closes here and then we get a further rally down, that's going to be your propulsion gap. So that's where we will potentially head back up into. They've just closed that propulsion on the DAX. We are getting some buyers stepping in here, though. We've got 2 minutes left on this candle. This could be a perfect spot for a long buy on the DAX. Stop under that low for that gap fill. And obviously, as we discussed yesterday with the DAX, longer hold as well. So, you know, don't forget we got this to do and this to potentially do as well. Yeah. So if you want to get in, as we said yesterday there, target 1, target 2, target 3. Take 3 entries, get out of 1 there, get out of 1 there, and get out of 1 there. So same thing today. If we're not going to retest that low, we're going to put in a higher low on the daily. That is your low of the day. We go. Hold it as long as you can. However, obviously, bear in mind that there's a high probability if you move your stop to break even, you'll get done on a gap next week. So if you're going to put a stop in, just put a stop in and leave it there. Otherwise, you're just going to get stopped out on a gap. Right, so we watch what happens with those this morning. That's Euro odd we've covered. Did we? No, we didn't. Swiss yen, sorry. Obviously, that's coming down. That was an RSI extension to the upside on the 4-hour and the hourly, all starting to roll over now. Euro odd is a 1-hour and 4-hour was. So that's a 4-hour RSI extension. Obviously, entry is impossible on it if you're trying to get in today. That was your entry there, which was off the back of first news. So if you didn't get that candle or you weren't using the EA, which would have got that candle for you, then you couldn't really get into it. But that's extended on the hourly, just not over the 25 though, and the 4. Euro yen we know about. So that was extended. That's been extended for ages and embedded. Again, look at the difference here between getting in on a 70 RSI extension, which is there, and an 80 RSI extension, which is there. And then look at the distance. 190 pips. It's 1.5 ADR of less drawdown you take by entering on the 80 instead of the 70 with the RSI on the 4-hour. So especially when things are volatile, but then you have the argument, the other side. And again, there's always an argument for the other side with everything. Yeah, but I would have missed that short. Yeah, but I would have missed that long. I'd have missed that short. Yeah, you would. But you would have missed that squeeze. Horses for courses, isn't it? Take your pick. That would have been a nice entry and exit. That would have been a nice entry and exit. That would have been an entry, exit. So you'd have been into 2 positions on that one there, 2 trades on that position. But you know, on a squeeze, entry wouldn't have got the 80, but the entry on the 70 there doesn't matter where you took it, it was all the same. That one there, you can't see it because I'm in front of the drawing, but anyway, you get the point. So there's your euro yen. So next news obviously is in half an hour. So, but I wouldn't worry about the next news. So the decision now the market has to make is how upset are we with those figures? Are we going to go for a 200 ADR day back down into support on the euro yen, for example? The US dollar started to power up this morning, which has helped the yen power up. So if we are going to get yen strength coming through and the euro isn't going to have any pullback or power today, this thing's got 200 to 300 ADR written all over it. Unlikely we'd get to there. Be nice, but we'll see. So that's euro yen, 4-hour RSI extension, obviously, but that's the second extension. So there's your divergence. You are a divergence trader. Yeah. But then again, you would have had divergence anywhere from that high here. So you would have been looking at divergence entries anywhere when we broke above that high. So pound odd, 4-hour and 1-hour RSI extension. So that is extended now above the 75 level. That will trigger in a minute when the 4-hour candle closes, rather than 1 hour 23 minutes. Hourly RSI extension, just about, not quite got the 75 on it yet. Pound, as I say, very, very, very difficult to call the pound. So the Australian dollar obviously has weakened overnight, which has caused the pound odd to rally. We've had the retail figures come out, which has made the pound rally again. And we had all that news yesterday, which the market did not have a clue what to do with. So I think it's too early to tell really what the market's going to make of the pound. If you look at the buyer scorecard, the pound now, pound odd is a buy, we know. Cot is positioned long. Retail are all shorting it now. So retail are shorting the pound odd. Therefore, there's a very good chance it's going to carry on going up. Same with the pound CAD, although oil has just collapsed. So that -1 there could well turn into positive, making that much more of a buy. So the rest of the pounds are fairly neutral to bullish. So we've had a bullish stance on the pound for a good month or so. You know, it's been more bullish than it's been bearish. But it's also been quite range bound because nothing has had a particularly bad stance against the pound either. So as you can see now with the pound pairs, all the pound crosses basically are all 0 to 5, all plus, all buys. The euro pound is a sell. Yeah, so we want to be buying the pound, and we have wanted to be buying the pound really for a while. I think apart from things against like the yen. Oh, good one, DAX. The DAX has decided actually, no, we're not going to go for the gap fill. We've just had some euro negative news. So instead of rallying like we usually do, we'll go down. So DAX is attempting an ORB short. But I mean, that's really all you've got before you're going to hit limits. So, wow, that's coming down hard. That fast. So your ORB to the upside failed on the 5-minute, and you flip short, but you flip short straight into potential support. So that support, so literally that's a wiggle room you got. So we'll see if we get limit triggers here. If not, I'm not quite sure what's going on with that. It's the euro rallying back up again. Right. Odd reaction on the DAX. Normally you would see the DAX do the inverse of the base currency. What's the rest of the indexes doing? Oh, okay, this is a sector sell-off. Look. Okay, so the DAX is dropping because they are selling a stock sector. So all these are dropping at the same time because there's a sector sell-off. So this isn't related to the euro. This is just they're selling cars, whatever. They're selling a sector of the index. So we'll have to wait for that to finish and then see. But you should really see this DAX rallying off the back of the euro. What you can do when they decide to do that. But right. So just going back to the RSIs. Pound odd we've covered. Only other one we've got is the US dollar yen. As we know, our friend the US dollar yen has been getting a little bit too high. The Japanese have been unhappy about it. We broke yesterday. And today, it it seems that we've got a very nice move starting, but we've got this propulsion gap. So this is the accumulation break. This is the potential support where they will add to their buy positions they've just started. So this area here is going to be quite critical today. If that area doesn't hold, it means that the buyers who started the breakout haven't got enough energy left to add to those positions. So their last chance will be to get limit order buys at support, which was the previous resistance level. So that area, if you are short on this off of the H1M5 mean reversion entry yesterday, I'd watch that level. So yes, previous day's high, and obviously this resistance here. Just watch this, which is also ADR. So basically, if we get an ADR hit to the downside, just watch the price action there. Don't forget, we've got the US PMIs coming out at 2:45 this afternoon. So if we are down here by 2:45, probably worth protecting it, because if we get positive PMIs on the US, we're going to have, obviously, you've seen the reaction we've just had on the euro. You're going to get the opposite on the US. However, if we get negative PMIs on the US, you know what happens when the US has negative news at the moment? The thing just collapses through the floor. So again, we could be looking at a 200 ADR move, but we'll see. So at the moment, it's all going well. So that was your hourly RSI extension and your 4 hourly there as well. But this is obviously massively bullish, not because of the US dollar, but because of the yen weakness. And obviously, we know that the Japanese are making rumblings about stopping this anymore. So, you know, this is why you see the moves like this happening. Yeah, we're going too hard. Intervention. You didn't listen. Intervention, intervention, collapse. Yeah, it's going too hard. They're talking about intervention. So this, you know, we're just waiting for the signal basically from the yen, which will be 300 to 500 ADR in the opposite direction, that you're not listening, we're not having it anymore. So as I said, typically what you find is the market tends to react to that before it happens. However, as you've seen there, and we were in it last time, they will do it. So that is extended to the upside. I wouldn't have any qualms about getting short on that at all. That's it on those. Shout out if anybody wants to have a look at anything else. There's a couple of people wanted to look at some stuff. Dallas, afternoon from Australia. Whipping post, finally out of Aussie New Zealand. It's firmly in the sin bin, undergoing PTSD counselling. Welcome to your first squeeze. But hopefully, as I've been saying all along, you have to live through a squeeze to understand how position trading works. Yeah, you will get out of it. You're not going to get out of it unscathed. But then again, if you use a stop loss, you're just going to constantly get out of stuff unscathed and not unscathed, aren't you? So it's no different to trading in any other way, shape or form, except that we do not just take our losses straight away. We take our losses along the way, and then we get out of the position with a very small loss compared to normal. I didn't do the analysis. That was what I was going to do, wasn't it? Let me do that now. Because I said we would do an analysis on this after the event. Let's do it. So yeah, so it's just, you know, when you've lived through a squeeze, limit orders are just triggered on the DAX. So just watch this. If we get an inside bar here, that's a good break long. They're still selling the sectors though. Whatever sector they're selling, they're still selling it. So careful. What do I want to load? Single results. Portfolio. Sorry. Okay. Right. So Aussie New Zealand. So as you know, with this position, I'll have a look at the ones you want to look at in a sec. Just cover this quickly because I said I'd do this. So entered back on the 23rd of May on an H1M5 mean reversion entry. There. On the New Zealand dollar rate announcement. So the New Zealand dollar rate announcement came out as positive. Typical reaction is positive movement. Same as the pound yesterday. We had an unexpected increase above what we were expecting, and the pound didn't rally, it collapsed. Same thing with the New Zealand dollar. So we had this massive negative move against the New Zealand dollar on a positive news event. So the first thing you think is, right, fade it. Yeah. RSI extension, M5 reversal alert, EA took the trade, in. Next day, we had a bit of a rally, then we had a bit of a drop. So it's like, okay, that's fine. We're doing an M pattern reversal. Then we rallied again. Ever since then, it didn't recover. Then the Australian interest rates came out as positive, and the market went, oh, that's good. And we were like, no, it's not. Because you haven't undone the Aussie one, the New Zealand ones yet. So that's where the squeeze and how the squeeze started. So on a normal trading account, if you were a mean reversion trader of any type, you will be looking at opportunities to get in for the mean reversion. So as this gets there, there's the mean. As we push up further, the mean gets closer. And as we push up, the mean gets higher. And you're basically looking to come back. Think Bollinger Bands. They have a line in the middle. So you take trades to the mean. Yeah, that's what mean reversion trading is. So we're always just looking for that profit take move off of the rally to exit. So what typically traders would do with a stop loss is they would get in short, put a stop loss, get stopped out. Have another go, get in short, put a stop loss, get stopped out. Have another go, get in short, stop loss, short, stop loss, short, stop loss. By the time you got up to there, you'd have gone, screw this, I'm not doing this anymore. I've lost 15% of my account. Position trading, what the outcome of that entire move from the 24th of May through to the 24th of June, a month, the total outcome of all of those trades was $122 loss on a 100K account. Break even. So I broke even on the trade. Yeah. So not good, obviously. You can see it's a terrible trade. So we started off up here. We lost $1,000. We scaled out down to a 9 grand loss. We ended up with a 12 grand loss. Aggressive drawdown control, pulled back 10 grand. Level, came back out at break even. Yeah, so that's basically what happened on the trade. And as you can see, there's all the scale outs on the way. First aggressive drawdown control, second aggressive drawdown control and exit. Yeah. And then rollover starts. There's your M pattern multi-week, in this case, M pattern reversal. And this is the profit take now underway by the banks on this move. The banks have been making money. Get up to there. Some of them take profit, then some of them add back on, then some of them take profit. By the time the second profit take started as a bank and you're sitting on 50 million in profit by the time you're up here, you see your profit go down to 43 million on that pullback, then back up to 50, then back down to 43. You are told to sell because you can either hope and ride that 43 million out for another leg, or you can bank 43 million. What would you do? You're a bank, you need money. That's your job, make money. So the profit take move starts. As the buyers take profit, the sellers see a sell move start. So they start selling, and that exponentially starts the leg down. So the leg up is caused by people seeing buyers buying, so they buy. Then when they see sellers start to sell, they sell. We're sheep. We're all sheep. Banks are sheep. Every human being is a sheep. You see someone do something, you copy them. That's how it works. This is exactly what's happening. So it's just the profit take move starting. Obviously, as human beings, we need to get out without hurting ourselves. And that's exactly what happened on that trade. So there's a really good example of a squeeze. Again, there's examples on YouTube I've already done, and one of them is in the Aussie New Zealand. But that's basically what happened on the Aussie New Zealand. It's a squeeze. It didn't work. Broke even on it. Didn't make a loss. That's the difference. And this is where you look at your P&L and you look at your your overall account drawdown and individual position drawdown, this is not loss. This is unrealized profit. I'm waiting for this to go positive so that I can put it here. This is obviously a bad month for the strategy across all instruments, obviously, but you know, it's just that's the way it works. So it's a really good example, and I said I would show it when I was flat on it. I forgot to do it yesterday, just so you can see, you know, how it all played out. But you look at the portfolio overall. And obviously, as I say, this is massively over leveraged, this account. But there's not any huge losses on the account, yeah, across the board, yeah. It's all like little bits of profit, little bits of loss, and this is what a position trader is all about. It's using this profit that you've made. So 1.4% made this month on the New Zealand CAD, 1% made there, you know, 1.4% made there, percent made there. You add it all up, and then you're using this profit to offset anything that goes in drawdown against you so far. But obviously everything that's in drawdown now that was minus 12 or whatever it was this morning when I came on is now sitting in minus 4%. By this afternoon, that could all be sitting in plus 6%. And then tomorrow or Monday, it could be sitting in plus 12%. Yeah, that minus 11 on the account at the moment on Monday could be completely wiped out. Yeah, it's a long-term strategy. It's a consistently profitable strategy over time. You're not going to make money every day and every week with it, as you won't with any type of trading strategy, except we just don't take losses constantly. So there you go. So that's basically, that's that covered, because I said I would do it. DAX is, the limit orders are triggered off the lows. There you go. So they have bought the lows. Difficult. It's just whipsaw. So 9 o'clock in 7 minutes, we've got the Euro consolidated PMIs. So once that is out, I think we'll probably start the move for the day. So those sector purchase, sector sell-off is stopped as well. Look, that's given the DAX a chance to rally. So we'll start again. Nasty whipsaw. Nothing you can do about that today. Right. So what did everyone want to look at? Morning, Amar. Gold. Gold. Okay. Hang on, I just got to get John Wick out. I'm wrong thing. I keep opening the wrong terminal. Gold. So we have got the breakout now on gold. We looked at this yesterday. We've looked at it a few times this week. As I said yesterday, now that we've broken down, that's your next support. So we've got this accumulation, just a bit of a pullback really, isn't it, there, which is kind of where we are. So this level here, which was previous resistance, so that's where that rally ended. We pulled back, we pushed up above it, we bounced into it 3 times and then rallied again. That's exactly where we are now. So potentially this is an area where you might look for a buy. The US dollar's powered up a bit this morning. We've been waiting for some strength to come through in it. And as I said yesterday, it looks like we are starting to get that strength showing finally. So next stop, I think, is probably down here, 1850. But it's really going to depend on gold's pushing at the moment. So obviously US dollar's having a bit of a weak run at the minute, but it's going to depend on the PMI figures this afternoon. What's happening at the moment with the US dollar is every piece of positive news has that kind of effect. Every piece of negative news has that kind of effect. So the market is looking for every possible opportunity to sell the US dollar at the minute because it's got no faith in it anymore. We've got talk of them going default and not being able to pay their debts. We keep getting told we're hitting terminal rate on interest rates, and then they keep putting the interest rates up. There's a housing bubble about to burst worldwide, but it always starts with the US. So there's so many negatives for the US. and what typically happens with interest rates, which is why we keep a very close eye on the interest rates, is they make a currency attractive to investment. So when you see interest rates going up, the normal reaction you have is, let's buy the US dollar. So we're sitting at 5.25. The only people higher at the moment are the New Zealand dollar on 5.5. Yeah. And now the pound at 5 is catching up. What we are seeing, however, is, I'd love to put my money there because they've got the highest interest rates and it's going to be the best place for me to put it, but I've got absolutely no faith in their economy at the moment. So I think that is what the market's reaction is at the moment to positive news is, it looks all right, but wait for Powell to open his mouth again. Or wait for us to get more signs of their economy going pants up, like PMI figures, for example. So it's more of a sell, which means you want to be buying gold. However, that isn't what we're seeing at the moment. So it depends what sort of term you're looking at. But as you can see, the market has no bias. If you buy it here, get out at a resistance and assume that we're going to get the drop. When the drop starts, if the drop starts, the drop will probably be hard. But it's going to take Powell to come out and say something, the Fed to come out and say something pretty bullish about the US, because at the moment, all the time they've got this we can't pay our debts thing hanging over them. There's never going to be any money wanting to go into the US in any big way at all at the moment. So the thing that you would look to buy if you're going to put it out of the US is the yen and the Swiss franc. We know how weak the yen is at the moment, and if the Japanese intervene, that money out of the US is going straight into the yen. So look at what happened last time they did the intervention to the US dollar yen. Intervention started, main intervention, which is kind of like an 8 ADR move. That's what happened afterwards. Yeah. So they pull the money out of the US dollar and they put it into the Japanese yen. Yeah. Much smaller at the moment, but this is what this is kind of Japanese intervention. Hey, we told you not to do that. Second intervention. First high, low, lower high. Yeah, that's where I see it going if they do kickstart it. And if they do kickstart that move, don't forget what we're going to see is somewhere around an 800 pip drop. So you'd be looking somewhere down potentially at the 72 ADR. So this level here, which is 2 months ago's high, in one day. That's the sort of thing that we're looking at when they press the button. So if that happens, where do you think gold is going to end up? Probably, I would say somewhere around there. Yeah. So you don't, this is why I don't trade gold as well, because the US dollar will absolutely fly, which causes massive fluctuations in gold. Gold also used to be, not so much now because of what's happening in Russia, but it used to be a massive safe haven. So when money came out of the US dollar, it would rally into gold because you could store your money in gold quite safely. Gold is always in demand. It's jewelry, it's manufacturing, it's electronics, it's everything. Gold is used everywhere. 44.8, 50.3, it's all negative PMIs on the across the board on the euro. Poor old euro. So the DAX is obviously having a massive reaction to that, as you can see. So yeah, with gold, obviously, you used to be able to buy tons and tons of gold. The problem is now 25% of the gold stocks in the world are locked up in Russia with an import-export ban because of the war. So gold is not what it used to be at all since the war. So you're a little bit stuffed. And as you can see, it's just sideways. So there you go. There's my analysis on gold. Let's watch these euros. So euro US dollar reaction off of the combined PMIs, not particularly strong. As I said, that's we kind of, the market doesn't react massively to this one, which is kind of why it's orange news, because we know what the result's going to be, because we've just been told the two largest parts of that are negative. So for that to come out positive is going to take a hell of a lot of other countries to have a good time when the rest of Europe's having a bad time. So that's why you're not getting a massive reaction off the back of that. So question is, where are we going to pull back to before second leg, if we're going to get second leg? So any of these euros that you're in, obviously there's your break of Asia. That's a level worth watching. So we'll see. The DAX is having a bit more of a rally now. So that buy that I said there, so you got a 125 ADR move now back up to the top. So looking good. Morning, Brian. Euro US dollar, just covered that news. So it's a sell. I've just got out, but it's a sell. That's really annoying. My target on this trade was that propulsion gap. Did you see? I don't know if you saw, but that is exactly where my TP was on that trade. 108,595. 108,595. There. So top of that propulsion gap is exactly where my target was. I got out there. Well, the EA got me out there on a 1 ADR profit move. That was my personal target on it. So just goes to show, you should trade yourself and not let the EA do it for you. Morning, Michael. Aussie dollar CAD and Euro CAD. So Aussie dollar CAD we've already covered, but because that is RSI extensions. Massive drop at the moment on it. So there's two positions on this on the H1M5. First entry was there. There was also an entry potentially there. Didn't quite get on that one. The conditions weren't quite right for the EA to take it because the reverse alert had happened before the RSI extension clicked in. So first entry was there, scaled out. Second entry has just gone in this morning. So we've just had a reverse alert on that this morning. There. So that's your entry, and you've just had a retest of it as well. Lows holding at the moment, but that looks like that might well get invalidated as well. So Canadian dollar strength coming through with US dollar strength. Australian dollar's completely fallen out of bed this morning. So there's a potential for this to be an A-shaped recovery. Pretty much is an A-shaped recovery already, but the monthly low at 150 ADR is where you'll get those limit orders trigger. So third entry there, or second entry, or however many you're in, and then play the bounce off of that. And EuroCAD, at the moment now, obviously, again, the euro is becoming very similar to the US in the fact that what Lagarde says to rally it has little effect. We had a positive interest rate rise on the euro, higher than expected, or rather the market factored in higher than expected. We still got a positive interest rate rise. The euro collapsed. Yeah. Good news for the euro, collapse. Good news for the US we've had, collapse. Good news for the New Zealand we've had, collapse. Pound, collapse. Euro, we just had negative news. What do you think the market's going to make of that? When it rallies, should rally on positive news, and it actually collapses. If you get negative news, they're not interested. So what we're going to find this afternoon is we're either going to get positive or negative news on the US dollar, which will rally or drop the Canadian dollar along with the US. So where we are here, we'll either get completely undone on negative US news on PMIs or positive news on PMIs. This is going to come down further. So very difficult to tell at the moment. You've just got an RSI extension on the hourly, which has hit the 25 level, but it's pulled back. So you're not actually going to get an entry on that at all until you get back above ADR today. So it's not going to be a trade. So there is an entry there right now as a long, and that is off of weekly support resistance levels as well. So you've got two levels here. So this zone basically is a buy area. and that's 125 ADR. But we've just had really, really negative news. And the danger you've got is positive US news this afternoon driving this down. So I would say if we got 175 hit on this today, that's a nice scalp. Position-wise, position trading-wise, as with everything at the minute, it's very difficult to tell which direction you want to take anything because nothing's reacting as it should do. So that's where we are with it. Euro US dollar, first 4 hour paying the bills. It will do today, Brian. Doesn't matter which way you go today, you made money. Where was the 4 hour break today? There. Oh no, hang on. Oh, lovely. So with Brian's little strategy, say little. Not so little today, is it? So there's your break of the... Oh, double click on this mouse is doing my head in. There's your 4 hour break. What's your R on that, Brian? Somewhere in the region of 10. Not bad, is it? But did you hold it? I didn't. Yeah, good move. Christian, morning from DK CAD Yen. So CAD Yen I've already covered as well. I don't know how far behind the chat I am, but yeah, CAD Yen is the same as all the other yens at the moment. We're looking for yen strength to come through. Yeah, basically just waiting for the yen intervention, really, or for the market to figure out the fact that if they don't intervene, that they will get run over. Up to them. Nothing we can do about it. It's the banks, basically. So the Swiss came out yesterday and said, you know, we will buy up the Swiss franc. If the Swiss franc starts to drop to a certain level that we're not happy with, we will buy the Swiss franc. They're very open and honest. The Japanese say, we are closely watching the FX markets. Undesirable moves in the FX market are not going to be good. I.e., if you keep pushing us, we will just buy a ton of our currency. It will all go down and you will all be stuffed. So the bank's job is basically to manage their risk. So if they deem it viable for them to continue to rally against the yen, they will do it. The yen will step in and sort it out. But what you tend to find most of the time is they'll push it. It's like a child. Yeah, you tell a child not to do something, it does it again. Then you tell it not to do it, and it does it again. Then you tell it not to do it, or there's a consequence, and then they go, "I'm going to do it one more time." And then they go, no, I won't do it again. And they never do it. They don't do it again, do they? Right? So what we're seeing is them going, all right, sorry. All right, sorry. All right, sorry. And then it'll go, okay. That's what tends to happen. That's what looks like is starting now. And it always looks like it's starting. But it will start at some point. And it tends to start with a large move, obviously. But what you tend to do is also end with a large move. So when you're looking at squeezes coming to an end, case there, but you tend to find you end with a rally. And basically what the rally is the last batch of sellers getting run over. And the market has to push much further than normal to go and find some sell orders to fill its buy orders. So you end up with a large candle at the end of a move. And that large candle either tends to be a big bull candle followed by a big bear candle, a bearish engulfing, which is basically them buying up and then the next day getting sold back down, or it ends up being something like a shooting star. And this is why it happens. The buyers are trying to find orders to fill. They can't find any, so they actually go, this isn't going any further, guys, let's sell it off. The sellers then see that and go, sell move starting. They'll try a move, they'll get a bear candle. Everyone then sees a 3-bar reversal and everybody starts to sell. And then you get that. So we're just waiting for that signal to hit the market and then it comes down. And that's the same with all yen pairs, everything yen. It's all the same. Aussie dollar yen, obviously, we've had that super rally on the Aussie yen. The Aussies had another down day. So, you know, that is starting, but that's not starting because of the yen. It's starting because of the Australian dollar weakness. And New Zealand will be doing exactly the same. So it is starting to find a little bit of strength. So yeah, good spots. So today we've got an outside bar, for example, on the New Zealand dollar yen. So that's yesterday. That's today. Outside bar. Outside bar is a reversal pattern. Well, it's an indecision pattern. Same as an inside bar. Inside bar is an indecision pattern. Typically off the back of an indecision, you get a reversal. So we're rallying. We're not sure if we should rally anymore. Okay, let's try a sell. Did it work? No. Okay, well, let's try a buy again. Did it work? No. Okay, well, let's try a sell again. M pattern reversal. This is the engine, if you like, underneath the candlesticks. That's what's happening in the banks and institutions. They're trying price discovery. They accumulate, they try a move, they try and discover if there's, well, that's why it's called price discovery. They see if they can trade at that level. If there's not enough sustained buyers to trade at that level, the sellers will rally them back down. Then you price discovery to the downside. Then you come back up again, which is why 80% of the time the market is spent in mean reversion. Because for a market to transact, you have to have equilibrium between buyers and sellers. When there's people that want something and other people want the other way more, you pull back. Which is why trends happen. When everybody suddenly thinks of the same way, yes, I'm happy to buy it at a higher price, take some profit. Yes, I'm happy to buy it as a higher price. You get a trend. When that trend comes to an end is when you get exactly the situation we're seeing here. I'm not sure if I want to buy it at this price anymore. It's quite expensive. I'm going to try and sell it off. No, there's still some people that want to buy it at this level, but not enough. All right, let's start selling it again. And then we'll do the opposite until we find the level of equilibrium, which is why you have trend, accumulation, trend, accumulation, trend, accumulation, equilibrium, balance as it's called in the markets. So that's where we are with all the yen pairs. And fingers crossed, the market does what it should do. If it doesn't, it will be forced. So that's your yens. Brian, over 10R. Good man. Those are the days you pay yourself. Paying yourself? Oh, I'm on it. I've got a trailing stop on this euro yen. I've got a position on running on this. I've also got the pound yen on short at the moment. So the pound's obviously had a reaction. Again, when we talk about markets reacting together, US dollar and the CAD react together, the Aussie dollar, the New Zealand dollar react together, the euro and the pound react together. So euro bad news, not good for the pound. Why? Because we are the biggest trade partners. So our economies are interlinked. Everything rallying basically on the yen side of things and everything dropping on the euro side. So all we can do today really is just watch this market unfold. It seems like all of the mean reversions that we've been stuck in are starting to work. So it's just a case of waiting for these profit take moves to unfold and see how far we can get today. So the only other catalyst we've got available today is the PMIs for the US. Oh, sorry, we've got the pound at 930. Nearly missed that. So again, Eurozone PMIs have come out negative. So potentially we might see the same thing happening on the pound. Yeah. So if you look at the historicals in line with the pound, what happens in Europe tends to happen in the UK, mainly because of the services PMI. The services PMI incorporates a lot of the banking sector and your services like accountancy, that sort of stuff. If it's not going well in one country, it doesn't tend to go well in the other because obviously the services are all interlinked. So there's a good chance I think we'll see negative PMI figures coming out on the pound today. So we've got all this positive news we've had all week on the pound, apart from the Australian dollar, which has obviously caused the pound to do nothing but collapse. So if we get a negative news today, can't really see much happening in a positive manner. So we'll see. So that's in 15 minutes. And then obviously we've got the US this afternoon. So we'll have a look at the US PMIs, obviously, in the New York session this afternoon at 2:20. See how they go. But DAX today, from an opening range breakout perspective, pain in the arse. Doesn't really matter. The only, the only ORB that's worked today, unfortunately, has been the pre-market 5. So there's your pre-market 5. That hit TP. Your pre-market 15 didn't get there before it came back and stopped you out, flipped you long, stopped you out. So as you can see, rotation day. You can't make money on a breakout strategy in a rotation day unless you are scalping super, super tight. Right, sorry. Send me your address. I will send you a new mouse. Steven's starting to annoy me now. I have ordered one, Alistair, so don't worry. I've got one on the way. It's just annoying because I buy... Oh, I can't really show you. Cable. Oh, yes, I can. I buy Razer products, right? This is a Razer Death Adder, and I had a Razer Death Adder Elite. So the Razer Death Adder Elite was about 80 quid gaming mouse. So I thought, and that one lasted, before it started double clicking, it lasted probably 6 months, 8 months for a 60 to 80 quid mouse. I was like, I was expecting more. So I downgraded to the Death Adder Essential, which I've had now for probably 3 months, 4 months. Same thing. So either I'm not a very good advert for Death Adder for Razer mice, but Razer make really good kit normally. Or I just use my mouse too much. And the only way you can really, like, if you blow in it, sometimes it fixes it for a couple of days. Because it's all it is the connection failing. But I decided, no, screw it, I'll just buy another one. I think the Razer... why am I on Bing? Oh, what? This plugin has taken over. Right, not having that. That plugin for Bing. Do you want to use our new AI? Oh, did we tell you that now we put it in Chrome, everything you do is going to be on Bing? Piss off. Yeah, so I'm just going to buy another one of these. So basically, it's like 20 quid or whatever. Where's the one I had? I had a V2. Hyperspeed. I'm sure it's called the Death Adder Elite. Maybe it wasn't today. But the one I had was like, say, 60. It's probably this one, Death Adder V3. I'm just going to buy one of them. Little, just 20 quid every 6 months. Logitech Proteus G502. Is it going to be one of those? This is £900. Yes, it's 83 quid. I've spent 80 quid, 60, 80 quid on mice before. And this is the thing that annoys me about mice. Like, there's the G502 for 83. There's the G502 for 39. They look pretty similar. But why is 140 and 180? There's obviously a massive difference. So, yeah, I don't know. That's what I want, a G502X Plus Lightspeed. It's 147. It must be good because it costs 3 times more. Just want something I can point and click with. When you're trading, double clicking costs you twice as much money. Quite important, your mouse is good. Something I never cover in the course, equipment. You need a gaming PC, high spec, high quality equipment, a internet connection that isn't going to go down. And if it does go down, you need a backup that's on Wi-Fi or G3 that you can connect to. Because if you're scalping and you've got 200% in the game and your internet goes down, you're dead. So have a laptop. I have my Microsoft Surface sitting here. I have my phone sitting here, and if the internet goes down, this thing becomes a hotspot for that, and I'm back in the game in seconds. Important stuff. Should really talk about it more, but I don't. So now I'm going to go and uninstall that invasive plugin that's taken over my Chrome. So Euro's still coming down off the back of the news, continuations on those. Yen is having a little bit of a weak spot by the looks of things. Everything seems to be pulling back a little bit against the yen at the moment. So hopefully, though, yeah, this is market structure has shifted. So hopefully we're on our way now. MX Master 3, you can't go wrong. That mouse is a legend. Used it for like 5 or 6 years. Which mouse is that? Oh, the Razer. Yeah, this is the thing. I game as well. So when you're gaming, obviously, if you're playing a first-person shooter, that thing's getting a hell of a lot of action. So I thought, buy a gaming mouse like the Death Adder. It's designed for that. But when I'm trading as well, I'm constantly clicking. And like in here, I spend half my time click and drag, click and drag, click and drag. I'm constantly, literally clicking all the time. So it just dies. And I've looked up how to repair it and stuff. You've got to take it apart and take this bit out and maybe get a replacement for that if that doesn't fix that. And it's like 20 quid, 6 months. I could pay 20 quid to not have to do that for another 6 months of peace and quiet. That's my view on it. I don't care. I just want a nice mouse. I don't need LEDs on it. They just all seem to come with it now. I'll have a look at your recommendations for mice as well. I'll go and have a nosy. I do like the look of that Proteus, though. That's nice. Peter came late today, but made 1R. I will closely look at the DAX and let you know. Okay. If between 8.15 and 8.45 RSI 11 is extended and engulfing, it formed. It is usually nice 2-1R. Okay. That sounds very complicated. I'm using Logitech Vertical. Yeah. Logitech are the master of mice, aren't they? I mean, they always have been, Logitech. You mean you don't use the touchpad on your laptop to run the show? I do use the touchpad on my laptop on my Microsoft Surface, but that annoys me as well. I'm a mouse man. Don't forget, I was born in DOS. We didn't have mice. We didn't have graphical user interfaces. So when Windows 3.1 came along, it was like, oh, what? Is this magic? I can make something move around on the screen without typing keys. Weird. I don't really care. I just want a mouse that works. I don't want to have to go like that. And the screen as well, because I got Microsoft Surface, so I can do everything on the screen. But it's just not intuitive. I've grown up. I was in computing before mice existed, and that's it. I've had mice all my life. I don't want to touch the screen. I'm not in Star Trek. DAX is really stuck. We are undecisive today on the DAX. Doesn't seem like we want to do anything. Slightly worried about the speed of these gaps as well. We are, when you look at a normal market, we don't have that many gaps on the DAX. We do get them, but usually they fill very, very quick. Yeah. It's not often you get a gap followed by a gap, followed by a gap, followed by a gap, followed by a gap. Something's not right, is it? They're selling this off fast and hard. So although gaps get filled normally, if there's a fundamental shift in something that we don't know about at the moment, and this thing is just on its next leg collapse down, i.e. housing bubble burst, might not be a good idea to try and buy this up, but we'll see. Certainly struggling today, isn't it? We just got whipsaws, but that limit order trigger worked beautifully off of there. So that was a nice little trade if you took it. DOS brings back memories. I know. This operating system. My son's doing computer science at the moment, and he's got his mocks at the moment, which he's doing, and obviously I've got a computer science degree, and he was making flashcards basically for revision. So basically, they write on one side of the card something, and then which is kind of like the question or the thing that it is, and then they turn over a flashcard and they write the answer. The idea being is this thing, you write and describe the answer, which embeds it in your brain. So he wrote down RAM, and I was like, oh, brilliant, RAM. And he was like, he looked at me blankly, and I was like, why are you looking at me like that? He was like, he turned the card over and he'd written read-only memory. And I was like, no, RAM is random access memory. There's an A in the middle. Read-only memory is ROM. And he just scribbled it all out. I knew that, but I just didn't write it on the right card. I was like, okay, there's a fail. Anyway, very confusing, RAM and ROM, obviously. Anyway, doesn't matter. Going back way too far now. I asked him if there's EPROMs, if they get taught about EPROMs now. Because EPROMs we used to laugh at in computer science, because it was like, EPROM. I don't know why we laughed at it. It was to do, the reason was because EPROMs was to do with parity checks. And we used to call them parrot E-checks, as in a bird. Anyway, long story. But apparently EPROMs don't exist anymore. So EPROMs were erasable, programmable, read-only memories. But they don't exist anymore because computer technology's moved on to a certain point where they don't actually exist. So I was asking him about them, and again, I got that. What? Like, right, okay. Stuff's changed since I was at school. I've got more computing power in that thing than I had in the first PC I ever bought. In fact, more computing power in that thing than the first PC I ever bought. Anyway, show some love. This guy knows his stuff. Yeah, hit the like button, everybody. That'd be nice. Helps the stream. Right, I'm going now because I'm starting to sweat. It's 30 degrees in the UK, and I'm sitting in a box with, as you can see, my walls are painted black. So it doesn't help. So I'll be back this afternoon at 2:20, 9:30. In 2 minutes, we've got the pound. 1 minute, the pound PMIs are coming out. It's going to do what it's going to do, so just deal with it. And then 2:45, we've got the US. So we'll watch that unfold this afternoon and see what impact that has. All right. So have a good day. Hopefully we get all these moves starting to unravel. They all seem to be going in the right direction now. We just got to hope that we get continuation moves on these. So see how we go. Have a good one. Anything you need, let me know. I'll be in Telegram. Otherwise, back this afternoon at 2:20 and back tomorrow morning, Monday morning at 7:50 as usual. All right. So have a good day, and I will see you in the next one.